Retail investors poured more than $30 billion into Nvidia in 2024, making it the most popular ticker in the US stock market. After surpassing the $3 trillion market cap milestone last June, Nvidia is now one of the most valuable companies in the US. And Wall Street expects that valuation to grow as the new Blackwell chip begins full-scale production in 2025. While demand for AI chips has driven Nvidia stock's astronomical climb over the last few years, earnings growth has been decelerating, and more rivals are looking to gain market share by producing their own high-end chips, leaving investors to wonder if Nvidia can keep the party going as the competition heats up. On this episode of Growth Stories, we dive into Nvidia's 2025 outlook and how CEO Jensen Huang plans to keep the chipmaker front and center of the AI revolution. If there's one company that's become synonymous with the artificial intelligence boom, it's Nvidia. The stock was one of the best performers in the S&P 500 in 2024, as shares surged more than 170% last year. Huang's presentations at various conferences have become must-see TV for investors who look to Nvidia as an indicator on the overall health of the economy.
It's been pretty amazing. I've been doing this job close to 17 years. I don't think I've ever seen anything quite like this for a company that was already at scale like Nvidia is.
That's Stacy Razgon, Managing Director and Senior Analyst at Bernstein Research. He says the demand picture for the chipmaker's next-generation graphics units, which have become integral in data centers and AI applications, looks very bright.
The demand outlook is fantastic. They're selling everything that they can make. And in fact, the biggest constraints have not been demand, it's been supply.
That's because the new Blackwell chip is a complicated semiconductor that requires specialized components from multiple manufacturers.
The biggest constraint is something known as CoWoS, that stands for, it's COWOS, chip on wafer on substrate. It is a chip packaging technology that actually is done by TSMC, who is Nvidia's foundry manufacturing partner. They make the chips for TSMC.
CoWoS, or chip-on-wafer substrate technology, is an advanced packaging method that integrates multiple chips into a single unit. It allows for higher data transfer rates and lower power consumption, making it ideal for AI computing applications. Razgon says limited CoWoS capacity over the last 2 years has been the primary constraint on getting more Nvidia chips out the factory door. But Taiwan Semi, known as TSMC, is bringing more CoWoS capacity online in 2025.
If the demand is there to fill the supply that is coming online, the revenue number will be large. So that's where people get excited.
And there's a lot of anticipation over the launch of Nvidia's Blackwell chip.
When we were told that Blackwell's ambitions were beyond the limits of physics, the engineers said, "So what?" And so this is what happened.
The Blackwell is the successor to Nvidia's Hopper GPUs, which have become the go-to chips for AI applications. The Blackwell can be bought as a standalone GPU, or 2 Blackwell GPUs can be paired with Nvidia's Grace Central Processing Unit to create the GB200 superchip. Nvidia says that superchip will give customers 30 times the performance while using 25 times less energy. Huang estimates that Nvidia spent about $10 billion in research and development costs to make Blackwell, which will be twice as fast as the Hopper chip that sparked Nvidia's massive growth.
And then handover from Hopper to Blackwell should be happening over the next quarter or so. And again, Blackwell demand, as far as we can tell, still looks off the charts. Now, these Blackwell platforms are very complex. They have many different configurations. The configurations themselves are much more complicated. Hopper, for example, like the high-end configuration, it was a box.
That box costs between $25,000 and $40,000 per chip. That was a major price increase over previous AI chips, and Razgon says the Blackwell generation will fetch an even higher price. Analysts expect the Blackwell family to generate $62.6 billion in sales for Nvidia's fiscal year ending in January 2026, and more than $97 billion the following year.
So the high end of the Blackwell configuration, it's called the GB200 NVL72. Right? It's taller than I am. It weighs about 3,000 pounds. It has 72 GPUs. It has 36 ARM-based NVIDIA-designed Grace CPUs. It's got a bunch of networking. It's got a bunch of their chip-to-chip interconnect, which they call NVLink. liquid cooling, like all kinds of stuff. And that thing is going to sell for millions of dollars a piece.
Nvidia counts major tech players Amazon Web Services, Google, Meta, Microsoft, OpenAI, Oracle, and Tesla among early buyers of the Blackwell chip, which reportedly has a months-long waitlist due to massive demand.
But ideally, they sell more of that stuff. It has more Nvidia content, higher end offerings, they charge more. And again, we're ideally looking for a pretty sizable inflection as Blackwell ramps.
Razgon says an accelerated product roadmap could also impact Nvidia's bottom line.
They used to introduce new platforms every 2 or 3 years. They're kind of moving to an annual refresh cadence. My guess is you will probably have more overlap between generations of products, just given not every customer can move on an annual cadence, right? So you probably have more overlap. So they're going to ramp a lot of Blackwell. I bet you'll still have material amounts of Hopper in there for a while as well, too.
While Blackwell is seen as a major growth driver for Nvidia, the rollout of the new AI chip hasn't been smooth. In August, the company announced it would have to delay the launch of Blackwell by 3 months due to a design flaw found late in the production process. And in November, there were reports that the chip was having overheating issues when connected and customized server racks, leaving investors to wonder if the new product would live up to the hype.
I think Blackwell's underappreciated.
That's Wedbush analyst Dan Ives. He says short-term delays don't dampen his bullish stance on Nvidia.
But again, it becomes a high-class problem for Jensen and Nvidia, but they continue, especially when you look at Blackwell, continue to own this market in terms of next gen.
Another area of concern for investors has been Blackwell's impact on gross margins.
In the near term, as these new Blackwell configurations come to market, margins are coming down a little.
Nvidia has historically had margin percentages in the mid to upper 70s. That figure has edged slightly lower as the development of Blackwell has taken place.
But the reason for it's not like competition or anything. It's just because they're focused right now on getting the stuff out the door rather than trying to cost optimize. Again, these things are very complicated. Thousands of different components coming from many, many places. And it takes time to optimize the manufacturing of those things. They're not trying to optimize it right now. They're just trying to get the stuff out the door.
Razgon says by the end of 2025, Nvidia's margins should be back in the mid to upper 70s and remain one of the highest in the semiconductor space.
They are suggesting that margins should be coming up as the platform scales. They're just working through some of the growing pains on that initial ramp.
Nvidia has built up its competitive moat by becoming a one-stop shop for AI chips and software. Nvidia dominated the AI arena in 2024, with AI chip sales accounting for more than 70% of the total market.
With AI chips, it's Nvidia's world, everyone else paying rent.
That's Wedbush analyst Dan Ives again. While the Chipmaker remains the leader in the AI marketplace, it's seeing growing competition as more tech players begin to make their own high-powered semiconductors. Those rivals include Broadcom, Marvell Technologies, Apple, Amazon, and Google.
People who operate data centers think about the cost of operations. They call it total cost of operations, TCO. Our TCO is so good that even when the competitors' chips are free, it's not cheap enough.
I mean, they're going to continue to own this market. You have competition around the edges, AMD, Micron, obviously, other tech players trying to do their own chips. But the reality is, we're talking about $2 trillion that's going to be spent AI CapEx. And there's only one red phone where the chips are ultimately going to. It's Godfather of AI, Jensen Nvidia.
Bernstein analyst Stacy Razgon agrees. While he says Nvidia remains in a league of its own in the semiconductor space, he sees competition forming in 3 different categories.
So there's other merchant suppliers like say AMD. There's startups, and then there's captive silicon. Many of the hyperscalers are doing their own chips.
Rival AMD is trying to catch up to Nvidia. The company's MI300 AI chip launched at the end of 2023, and is expected to generate more than $5 billion in sales in its first year of release. Meta is one notable customer, which uses AMD chips in its Llama AI platform. Razgon says while AMD's sales growth is impressive, it's still relatively small next to Nvidia.
In the grand scheme of things, it's not that big, right? If Nvidia's going to do, $130 billion in data center revenues this year, like $5 billion, it's not very big.
Razgon adds that AMD is also further behind on the product roadmap.
And they don't have the software ecosystem, the hardware ecosystem, the systems expertise. They're trying to acquire some of that, but there's not much there. And then Intel, who was sort of in this market, they're non-existent now.
Startups like Cerebras Systems are also trying to compete with Nvidia by producing an AI mega chip the size of a dinner plate. But Razgon says even if a startup could make a comparable chip, they would still have to contend with Nvidia's massive product ecosystem.
With every generation, Nvidia has a chip that's better than Nvidia. They have all the ecosystem and software that goes with it and the massive scale to support it. So I think it's hard for most of the startups as well.
One area where Razgon sees healthy competition developing is in the captive silicon market. Captive silicon refers to custom-designed chips created by a large tech company that's for their own specific needs. Hyperscalers like Amazon, Microsoft, and Google typically use custom silicon for unique workload demands.
This is very real. It's also not new. Like Google's been doing this for 10 years. And these guys work with companies like Broadcom and Marvell. And these are actually driving a good amount of upside for those companies.
Amazon's cloud computing division is spending big on custom chips called Trainium to boost the efficiency of its data centers. The company allocated $75 billion in capital spending in 2024 to develop these AI chips and other hardware. Razgon explains that while custom chips may be more efficient, they're not always as flexible as GPUs.
They still buy a lot of GPUs where they need the flexibility, and anything that they're deploying in public cloud that's being used by like enterprise, like end customers, tends to be GPUs. There's not a lot of appetite on their part generally to use captive silicons.
But while the competitive field may be growing, Razgon says investors should focus on the big picture when it comes to the AI market.
But at this point, I don't really care so much about competition. The bigger question I have right now is the opportunity big or is it not? Because if it's big, there's probably room for lots of folks. And if it's not big, they're all screwed anyways. At this point, it's all about like how big is the market. Like when the market growth saturates, then you can start talking about, who's winning and who's losing.
So what should investors watch as the Nvidia growth story unfolds in 2025?
It's really about Blackwell. I think Blackwell, we're talking about something that could be ultimately 5, 6, potentially 10 billion per quarter. Street's still factoring in, sort of a few billion per quarter. As this all ramps, you start to get a much better understanding of what this growth story looks like. And I think we're basically looking at a company that's changing our time in terms of their AI chips being the new gold, the new oil.
I think in 5 years or 10 years, we'll be talking about numbers that are materially higher than what we're talking about now. What does it look like in 2 years? I don't know. And I think that's the bigger question on investors' minds right now. We do know that their end customers are putting in tens of billions of dollars of investment on their own. So presumably they are not idiots. And they have some view of what they're doing and what they're putting this infrastructure in place for. I see the investments that are going in place right now. Nobody at this point is showing any signs of halting.